Tax season is underway. So before you rush to file this year, there are some important changes you want to know about, from new deductions to updated tax brackets. Even these changes could have a real impact on your refund. So joining us this morning is Mark Henry from Alloy Wealth Management. Mark, always nice to have you here in the Live Impact studio.
Thanks for having me on today.
So much to unpack here, right?
Yeah,
this tax
it's a lot.
season. Okay. It's okay because we have the time. And, I think folks who have the time this weekend, as we heard from Majestic, they're going to be cooped up inside, maybe, instead of playing in the snow.
Time to get started.
Why not? Why not? Let's start with the basics. What are the big tax changes this year that we should be aware
the
of?
big beautiful bill. We have some good news in there. Is there's going to be a lot of deductions that people aren't expecting or didn't even know existed. Maybe they heard it in the news, but it's really real. So there's a bunch. First off, your standard deductions have changed, and they're actually bigger. So single filers, married filers, they have a larger standard deduction. So let's make sure we look at that. Make sure your tax software is up to date if you're a do-it-yourselfer. You got to get the new version, the latest version. Don't use an old one, okay? So, and about 90% of Americans actually take just the standard deduction.
Oh,
so remember,
makes it easy.
Yeah, it does. So if you want to do itemized, though, there's some changes for that as well. So those have gone up. So we also have the senior deduction for people that are 65 and older. At the end of 25, they might be eligible for a senior deduction of $6,000 for a single person or $12,000 for a married couple filing jointly.
Oh.
So there's another little thing that's going in there. A lot of little changes. Some of the ones that are going to get the biggest attention, though, is things like if you bought a car in 25. Potentially, not again, there's always rules with everything, you might be able to write off the interest on the loan. Now, the car had to be assembled in the United States. Well, wait a minute. So I had to buy an American car. Not necessarily. It could be a foreign car that final assembly point was in the United States, and that happens a lot. So they build part of it overseas, and then they ship it over here, and final assembly is done here.
Okay.
But just because it's an American car doesn't mean it was built in the States. Be very careful on this one.
All right, so how do you find that out?
Right, so it's a great question. So there's a lot of data that you can go to with Chat GPT and other things like that will actually tell you. But you can actually look at your car. In the door, it'll say final assembly point.
Oh.
And if it says good old USA, you're golden.
You're good. Okay,
Right.
Hey, it's worth the effort.
Yeah.
All right, good.
So, but you always have to look at the details. Don't just
Right.
assume you qualify for anything.
Okay.
Now, this is a big one for people is overtime tax deduction. You may now qualify for overtime. To qualify, it has to be reported as overtime and things like that. But this can be a big one. And then the one that got so much press last year on your news and everyone's was simply the tip deduction.
Right.
So is that real? Well, it actually is. But this is interesting. A lot of people don't know this. If you're forced to tip, you say, well, nobody's forced to tip. Not true. A lot of restaurants are adding a gratuity to the bill. That does not count for a tip deduction. So if your employer's doing that, tell them to quit because you can't write the tip off.
Oh,
If
my
you're
goodness.
making the patron pay for the tip,
Right.
you can't write it off. So it has to be one where they just said, you did a good job, here's $20.
Yeah.
That gets written off.
Because in a lot of tourist-centric areas, they will go ahead and write in a gratuity, automatic gratuity.
Or
All
parties of 4 or more, 6 or more,
right,
something like
exactly.
that. Yeah, so again, if it's forced tipping, it doesn't
Do
count.
not. Okay.
Yep.
All right. So besides deductions, what are some of the other changes that could impact one's bottom line, whether they owe or receive?
Yeah, well, this is why I always encourage people to file early. And the reason for filing early is it gives you time to look for all this stuff. When you're panicked and it's due next week, it's due on Thursday or something, all of a sudden you tend to look over things. This gives you time to really look at it and think about, do we get the child tax credit this year? And again, that's up to $2,200. It's a $200 increase from last year. So a lot of stuff has changed or gone up to make it actually better for the people filing. Now, lowering your taxes.
Yes, let's talk about that.
Unfortunately, most everything that you might have been eligible for to do to lower them for this year should have been done before the 31st of last year. But there are still a few things you can do right up till tax time, which would be contribute to an IRA or a Roth IRA if you're allowed to, or your Roth account. So there are some deductions you still can do, and that's sometimes a reason why somebody might want to file late or delay filing so they can put more. Oh, I can't put it all in this month, but if you give me next month and the next month, I could put another $1,000 in. That could save people some taxes. So that's a reason I could get around delaying. Obviously, still has to be done in time. Now, you do find that one of the things that people are concerned about is identity theft.
Right.
you can only file one tax return per Social Security number. So there is this idea that if you file early and get your refund, no one can then do fraud and try to claim your refund because you've already claimed it.
Oh, okay. That's a
So
little
I don't know.
self-protection.
I don't know how I feel about that, but I
Right.
guess it's an incentive for
Hey,
filing
it's
early.
another reason to file early. And this can actually save people money too
Yeah.
by filing early.
Well, it can get them the refunds faster. Let's at least go with that.
Okay,
Obviously,
right.
filing early can at least get your things and eliminates the need for you to file an extension. And, again, if you're going to owe and you file an extension, then you're going to start accruing interest on that and loans and stuff because you didn't pay on time. So going ahead and like this weekend may be the perfect weekend with
Right.
the snowstorm of getting everything together and let's get started. Let's get down to the accountant's office or the tax preparer or the do-it-yourself. Go buy the software today before the snowstorm and go ahead and get it done.
Yeah, no, and all of the new deductions and changes at least get caught up on how
Right.
this might affect you moving forward. Any other piece of advice as folks start,
Well,
preparing to prepare?
Yeah, if you find when you do this that it's overwhelming, let's do something so the next year's not, which would be start contributing to all these accounts, the 401s, the IRA, so you're in a better tax position next year. Because again, trying to do it all at one time is really hard, but when you contribute to your IRA and your 401, at least get the match your company's offering, and all of a sudden you find next year you're in such a better position this time next year.
Yeah, your message sometimes is, you got to start now. You can't wait. Whatever you want to see next year, you got to actually kind of put steps now.
That's
so
right.
It's never too late. Mark Henry from Alloy Wealth, thank you for breaking this down for us. Appreciate you as always. And we'll see you for more Money Matters down the line on WCNC Charlotte.